Hey guys, it's Mark Thompson from CryptoMade. I am joined here by Matt Lopez. He's the co-founder of Crypto Mavericks. I'm so excited to have him. Thank you so much for joining me today, Matt.
Yeah, my pleasure, Mark. Happy to be here.
Awesome. So Matt and I, we connected about a month ago, and we're both kind of crypto nerds. We love just kind of diving into the industry, and we both have a passion around it. And I said, hey, why don't we jump on a quick call? Let's just talk shop for 30, 45 minutes and just kind of talk about what's going on in the industry. We're both, I think everybody here is learning every day. It's kind of a quick flowing market, if you will. And I know Matt has a ton of insight and expertise into specifically things like yield farming and technical analysis, things that I wouldn't say I'm an expert on. So I thought it'd be kind of interesting just to have that conversation. We know that there is a lot going on in the space, especially in the last 72 hours since we're doing this recording. Obviously Terra Luna, the UST stablecoin, just in a complete free fall. So Matt, I thought I'd just kind of get your feedback on what do you think's been going on with stable coins in general, specifically with a UST.
Yeah, so definitely an interesting place to start. I mean, this all kind of unraveled this past week. Luna and UST was something that I believed in the most, probably out of a lot of the other ones. Everything was looking really good. I mean, one of the top market cap coins, and it's just all kind of it's like the rug just got pulled out from under it. So I guess maybe I'll back up for a second and kind of explain a little bit of the way it's supposed to work, right? So the way it's intended to work. UST is really an algorithmic stablecoin. So what that means, it's a little bit different than, let's say some of the other stablecoins, Tether out there, USDC coin, in the sense that those are collateralized, right? So if you have a dollar, you put a dollar in it, and you get the stable coin as a dollar. So it's collateralized by the fiat currency. In this case, it's basically the mechanics of the algorithm that's supposed to balance it out at a dollar. It's not really tied or bound to anything, any fiat currency in that sense. So it's definitely more risky. And I knew that kind of going into it and understanding it. But again, it all just like looked really promising and worked for quite a while, actually. And yeah, it's just been kind of crazy to see. So the way it works, I guess, and I don't know if you want me to get into, I won't get too technical, Mark, but kind of just at a high level, basically you have this UST and Luna are, part of the same ecosystem, right? So what you can do, and to try to keep it at a UST at a dollar, which is a stable coin, if UST starts getting below a dollar, what you can do is you can swap Terra for $1 of Terra for the equivalent amount of UST, so it pushes it back up to a dollar. And then on the other end of that, if UST starts getting above a dollar, they can basically print more UST to then basically inflate the money supply to bring it back down to a dollar. Word on the street is that it's been kind of a targeted attack. And in all honesty, I haven't read too much into sort of, I noticed one person was saying conspiracy theories, or maybe it was just a delevering of what happened. But it's, I'm curious to really dive into the root. And I don't know if maybe have you read more into what caused that exactly?
Yeah, well, I mean, I know there's been a lot of theories, right? I don't know if
Yeah.
anyone knows for sure. I know a lot of people have been speculating about BlackRock and Citadel, saying that they're manipulating the markets. Obviously, hey, they're big institutions, right? They have tons of money, and
Right.
they have tons of Bitcoin and UST, and it seems like they almost did somewhat of a rug pull, and they just, so whether they manipulated the market to bring down the price of Bitcoin ultimately so that they can buy it on sale, I guess that's something to be seen. We'll kind of know the details moving forward, but it's just scary, right? It's scary, the fact that people think, hey, stable coins are supposed to be
Stable.
that, right? They're supposed to be stable. And when people are investing into crypto, they're moving their most volatile investments back into stable coins, which it's supposed to be stable, right? It's supposed to be pegged to the US dollar. And so that's really makes, I think, investors nervous. And I think that's why you're seeing just a mass exodus across all stages. And then when you throw in a war, you throw in a bad economy in the traditional markets, it just leads to the perfect storm.
Yeah, I agree. And I think one of the things too to kind of keep in mind, like for the listener, is that, on Anchor, for instance, which I know you're familiar with, Mark, and I know a lot of people are, the interest rate on that was like 19-20%. And I think that there is something to that, something to be said for, like, if it seems too good to be true, it maybe is. And that's just an extremely high interest rate. You know, in hindsight, you know, hindsight is 2020, but like, you know, looking at that high interest rate, probably should have questioned it a little bit more. I know one of the things that like the founder of UST and Terra, like he basically proved that it was a stable, that was a sustainable interest rate with like a tweet. It's like, if you can put out in 140 characters, like maybe it needs a little bit more explanation why you're able to have that high of an interest rate.
Yeah, and it's scary, right? Because people put, I mean, I've seen people put millions of dollars
Oh
into
yeah.
UST and into the Anchor protocol, and then they think they're getting 20% yield on it, which is great, right? I mean, what's the interest rate on in a savings bank? Like less than 1%. You look in Europe, it's actually negative. You're actually losing money. So it's nice to see like APYs that are yielding you 10, 20, 30%. And I always wondered, when I first kind of got into the industry, I started to notice like, man, how are some of these APYs, $1,000? Like, how are they, or 1,000%? How
Right.
are they doing this? And, 9 times out of 10, those projects are gone, right? It's just not sustainable. Maybe you can talk about that, because I know you know a lot more than I do on yield farming. Is it sustainable, right? I mean, what is a reasonable rate where you can feel comfortable that you can, be getting those yields over time and not have the project just get pulled out from under you?
Yeah. So, I think generally anything above 10% APY does start to get into the risky territory, right? Now, that's not to say that, you can't have something that is 15, 20% APY, but I think you really have to question it when it goes into the double digits. There is obviously a trade-off with risk to return, and you kind of want to stay on that risk to relative risk to return, curve, where, you're just maintaining a good balance. But in terms of some of the other projects, like, I know we've talked about a little bit like Time Wonderland and some of the ones there, those are generally, kind of built on, I would say, Ponzi scheme tokenomics, where it's, good for a little bit. If you get in early, the price pumps, it's super high APY, but they're inflating the coin like crazy, but more people are getting in, and then the rug gets pulled out from under, and it all just kind of collapses. There's definitely a time horizon on that, and it's not too long. Generally, they only last for a couple months, maybe
Yeah.
6 months at best.
And from what I understand, and correct me if I'm wrong, there in a bull market, everybody is bullish on, oh, I'll stake my coins. And I mean, the projects are relying on people staking their coins into these projects, right? So when you get into a bearish market and people start pulling out their funds, then they obviously can't, because they don't have those assets anymore. And I always wonder, like, how are they even affording to pay these people, 20% APY? Can you talk about the mechanics of that?
I mean, it really just comes down to inflating the money supply. So they're just
Yeah.
printing more out of basically thin. I mean, it is thin air. And then they, some of the projects that I guess they do try to just, fancy it up in some ways without, if you look into the token economics, but I have not, at least yet, to see one project that has been able to sustain a high APY over a long period of time. The one that I'm most bullish on is Pancake Swap. Now, I guess I will actually stop here and say, I would think about kind of this whole idea of earning yield in crypto in really three ways, and sort of three buckets, right? So on the one hand, you have just like centralized lending, right? That's like BlockFi, things like that, like the crypto.com app, they have lending as well. And that's basically the same thing as, a traditional bank, right? So it's based on lenders and borrowers. And it just so happens that in crypto, the interest rate on borrowing, crypto is much higher because just it's more risky. So that's one way to think about it. The other way is actually with yield farming, right? So yield farming is interesting. And actually, I'll actually skip to staking. So staking is what we were kind of talking about with like Time Wonderland, and basically you're locking up your coin for a certain APY. And again, I think that's a lot of the ones that have been in the space are based on, kind of Ponzi scheme economics. You're just inflating the money supply to be able to have that high APY. But yield farming is actually different, because with yield farming, it's basically a farm of two coins that people are trying to transfer in and out of, and you're getting the transfer fees. So that's actually something that I would say, relatively speaking, is less risky than staking, in a lot of ways, I would say.
Yeah. Yeah. And you see everything that's going on with UST, and obviously the Fed, right? They want to get their hands on this, and they feel like right now is a perfect time. Let me just I'm going to share my screen really quick
Yeah.
and just kind of show you an article that I was just looking at. So, Yellen cites UST breakdown while calling for stablecoin rules. So I think this is like a perfect time for them to kind of come in and be like, hey, like, these banking products, I mean, they should be treated like banking products, right? And there's no regulation on it currently. So I think they feel like, hey, now is the perfect time to have some sort of regulation framework on stablecoins, and rightfully so, right? I mean, for the most part, crypto is unregulated, and so it's the wild, wild west. And I think at the end of the day, the government, while they want to control things, they also do have the interest of the people, right? And they don't want to see things happen. Like just over the last 72 hours, man, I've seen some really bad YouTube videos and tweets coming out, and I'm really concerned about people and their mental health, because some people have lost hundreds of thousands or millions of dollars
Right.
that their money was tied up in UST and in Luna, and overnight you lose that wealth. And especially when you think that it's stable, that it's a less risky asset. So I do believe that some government regulation is needed. And I think it's going to help the overall market. While most people, who believe in crypto, you want it to be, deregulated. You want it to be decentralized. You don't want the middlemen. But, I feel like in order for it to have mainstream adoption, there needs to be some regulation. Do you agree with that?
I would overall, I'd probably push back on it a little bit, Mark, just because I am kind of into the idea, sort of original idea, right? If you read like the Satoshi Nakamoto, the Bitcoin, the white paper,
Yeah.
like kind of this idea of just a form of currency without any kind of middleman. So I do still kind of like that idea, but to your point, I would definitely agree. I think for the safety of investors, it is important to have some level of regulatory guidance on things and regulation. I do think that with the Fed and with Janet Yellen and what, I do think there's sort of two sides to it. They like to obviously market it as, it's for the safety of the people, but I also think it's, for the, to collect taxes on it and
Yeah.
just to be able to be in control of it too. So I think there's a bit of a balance there that needs to happen. I'm definitely not 100%, wild, wild west crypto, because I don't think that's good for any market to just be filled with scams, basically.
Yeah.
But
And we've seen it, right? We've seen it
yeah,
play out time and time again.
the ICO was the big one back in 2017, and just nobody trusted crypto, and it put a really bad taste in everybody's mouth. So I do think there's a good, healthy middle ground there.
Yeah, and I think some regulation will help to bring in more retail investors and institutions that want to keep
Yeah.
Bitcoin on their books, or other coins, but primarily Bitcoin and Ethereum. But yeah, you've talked to other people, talk to friends about crypto, and they're just skeptical about it, right? Because they've heard of all the scams and there's no regulation. So I think there is going to be a middle ground. I don't know when that's going to happen, but it's obviously on the government's radar. It sounds like it's going to be a priority. And I do think that it's going to help bring some stability to this new asset class. So we'll kind of see what happens. But as much as I love decentralization, I love deregulation. I do think that some regulation will be good. So we'll see.
Yeah,
Yeah.
for sure.
So what about, let's change gears a little bit. Let's talk about, the XRP lawsuit. So for people that don't know about XRP, so XRP is a project that is really meant to replace the banking system, specifically Swift transfer. So as everyone knows, when you go to do a bank transfer, especially if it's an international transfer, it could take 3 days, it could take 10 days, it could be, weeks, right? Before that person receives their funds. It can be very expensive. It's very archaic, right? And so I think the XRP and Ripple, they really are geared towards replacing that system. Now, obviously, they're in the middle of a lawsuit with the SEC. It's been going on for a while. And what's nice to know is that it sounds like there is a conclusion on the way in the near future. Obviously, litigation takes forever, especially something this complex. I was just looking at this article. So here's kind of a breakdown of the timeline. It sounds like what's going to happen with XRP. So for those of you who are interested in XRP, I think it's going to be a good investment long term if you're willing to kind of hold on until this SEC lawsuit is complete. Obviously, it keeps going more and more down. The price is down to 39 cents right now. So you can see, especially during the instability in this bearish market that we're in, it's gone from, just in the last day, just in the last 24 hours, I mean, it was at almost 47 cents, and now we're at 39 cents. And if you just keep pulling back, we were down, up to like 88 cents. And if you look at kind of what the all-time high were, that was over $3. So, and that was prior to to the lawsuit. So there's no reason to think that, hey, once this lawsuit is over and it looks like that XRP will win, I can't say that for certainty, but if they do, then there's no reason why this coin can't just go and run with it. There's a lot of people that are behind the project. It's in the top 10 in terms of market cap. So there's a lot of liquidity for it. So it'll be very interesting to see what happens. But in terms of the timeline, here's kind of what's, where's the article again? So it looks like, from what I can see, should the same waiting period apply in the XRP lawsuit, taking into account that briefing will only end on December 20th, 2022. In the XRP case, it should be over between March and April of next year. So, I mean, it's less than a year away. From what I can tell, the coin is just continuing to go down just because we're in that bearish market. And if you can snatch it up between 20, 30, 40 cents, and if you can hang on to it for a year until once this lawsuit settles and we get back into a bullish market, I think there is a lot of upside. So I'm not sure what your take is on it.
I would agree, Mark. I think, that's a XRP, what you were saying earlier about what they're working on really, which is international payments, international remittances, being able to transfer money overseas. I think that the sort of traditional way that we do that through MoneyGram and Western Union, it is kind of broken, right? The sort of payment rails for that infrastructure, it's based on old coding, COBOL kind of languages. And I think about it like the plumbing of the infrastructure, right? And I think that, like Stellar Lumens, XLM and XRP, like they have just, I think, basically created a better mousetrap where, they eventually will win in that game, and they're competing against Swift and, again, the kind of traditional financial ways, and those, they're not complacent either. They're like trying to see what XRP is doing and be able to catch up. But I do think, going back to the price of the coin, yeah, I think now is probably a good time to be buying. And, once that lawsuit is settled, that'll remove that headwind. So it can actually have some upward price momentum for sure. I find it more likely that it will pump again above the prices that it's at now than it just kind of goes down and keeps going down. But
right. Yeah. And it's one of those things as an investor, it's a risk reward thing, right? So obviously you don't want to put all your bag into it, but hey, if you can put $1,000 in it and it takes off, it could be a great investment. So we'll see what happens. Now, in terms of, let's kind of switch gears, talk about kind of the charts and what's going on with price action throughout, Bitcoin, Ethereum, and obviously the altcoins are falling, 60, 70%, some of them over the last couple of weeks. I mean, to a beginner investor, what are some of your recommendations? Obviously, guys, this is not financial advice. We are not financial advisors, so the little disclaimer there. But just kind of broadly speaking, what I've seen is, people always say buy the dip, right? Buy the dip, buy the dip. Well, the market keeps on dipping, and at some point, people just run out of money. So what's your take on it, right? I mean, dollar cost averaging is obviously a really good strategy during a bull or during a bear market. But what do you have certain levels that you look at, and then you say, okay, I'm gonna keep going back in, or are you doing it on a weekly or a monthly basis? What's kind of your strategy?
Yeah, for sure. So great question. I think this is super relevant, right, to people who are investing now. The first thing I would say is, in a bear market, I think it's really important to stick to the tried and true things, right? And so when I'm talking about that, I mean Bitcoin, Ethereum, XRP, like the coins that we know have been around for a while and have really proven, that stood the test of time. I think this is not really the time to be buying some of the other altcoins, unless the ones that you're really excited about and you can put a little bit in, and it's a little bit more risky. But I think now's the time to kind of stick to the big ones. And what I would say too about the dollar cost averaging, I think dollar cost averaging is definitely the way to go. For a few reasons. Number one is you are improving your cost basis that way. Likely it's very rare that somebody would be able to time the bottom, and if they did, it's probably mostly kind of luck. So it's important to like time in the market beats timing the market, right? You just want to be in the market when prices are going on sale. That's when you want to be buying. And so dollar cost averaging is definitely the way to do that. I would say doing it as much as you can, right? If you want to do it every single day, if you have the cash flow to be able to do that, most people get paid bi-weekly from their jobs. So I would say at least every other week, take your paycheck and put some into the crypto market or into whatever market you're buying into now. But I would say as often as you can do it, just keep dollar cost averaging. And what I like to do, just maybe this is more psychologically than anything, but just kind of buy more on red days, on the biggest red days. So if you see the market's down, up, you there, Mark?
Yep.
Okay.
Uh,
Oh, you're back now. So yeah, if you see the market's down 5-10%, that's probably a day that, at least me personally, I would buy a little extra. So it's kind of value cost averaging. I don't, dollar cost averaging technically is like, you're doing the same amounts of $500 every time you do it. I like to value cost average a little bit. So I'll play it out, kind of by ear, but
Yeah, I'm the same way. So I have a Merrill Lynch guy that handles a lot of my traditional investments, but obviously I like to be able to do a lot of my own, especially in crypto. But I like doing the value cost averaging as well, where it's always nice to have cash on the side and be able to deploy it in investments when there is a major crash, similar to what we're seeing right now, right? And when you see, especially like with Bitcoin, right, there's certain levels of support,
yeah,
and once it breaks that, you can see it that it tumbles, right? So there was a support at 40,000, there was one at like 36, there's one at 30, and then once we got under 30, right now we're around 28, and like the next levels we're looking at are like 24 and 20. So
yep.
that's kind of the way that I like to approach it, is like, okay, these are different levels or buckets, and once we get to that level, that's when I'm going to start chunking in more. But as people don't have just endless amounts of money unless you're a big financial institution. So it's always good just to have a strategy and be smart with how you're dollar cost averaging into the market. I thought maybe what we could do is talk about, I'm going to go back to my screen share, and
Yeah,
we'll just go over to CoinMarketCap really quick, and we'll just kind of see what's going on here. And specifically like all these altcoins, right? There are literally thousands and thousands of projects that are
yeah,
super high risk, super volatile, right? I mean, so right now we're looking at Bitcoin. We're right around 29,000, so bumped up a little bit. But if you look at it over the last 24 hours, it went down 6%. So if you look at some of the top 10, even look at coins 6 through 12, right? You're looking at double digits decrease in their coin, in their valuation. And so once you start to get down, way down here, I mean, it's pretty bad, right? I mean, you
yeah.
look at Ultra down, 70% in the last 90 days, right? And so here's what I think, right? If you need to wait until the market stabilizes,
Yeah.
right? Because we don't know when it's going to turn around. It's the streets are red. It is bloody out there right now. And it doesn't make sense to be putting money into some of these low cap or even mid cap coins when you don't know how far it's going to go down. But once Bitcoin does turn around,
Yep.
and you start to see investors putting money back into the crypto space, there is going to be generational wealth that is being built in the next bull cycle. Now, I know people always talk about the next the next Bitcoin halving, which happens every 4 years. A lot of people
Right.
don't talk about it that much, but the markets are cyclical, and we are. I mean, no one has a crystal ball. No one knows for sure, but I expect the next bull run to happen in the next year or 2 years. But be ready for it, right? And be ready to deploy money into these lower cap coins, because while yes, they're dipping 40, 50, 80%, the same thing could happen when we're on our next bull run. What are your thoughts on that?
No, completely agree. And I'm glad you said that, Mark, because earlier I said now's the time to stick to the tried and true. And the second thing that I was going to say to that is once we see the big coins and just the overall market starting to, get back on track and start to get into a little bit more of a bull run, that is the time to start piling into some of the altcoins, because they get hurt a lot more on the way down, but they're also going to have a lot more uplift on the way up too.
Yep.
So I completely agree. I think generational wealth will be built in the next bull run. And I think you're going to see the exact opposite. Right now, you're looking at some of these that are down 60, 65%. I think, you're going to see this reverse and they're going to be up 65%, where Bitcoin's going to be up, quite a lot too. I think they're really, Bitcoin can, hit 100K, I think in the next couple of years, but I think you're going to see really like 10x, 20x, 100x returns on some of the smaller altcoins for sure.
Yeah. And I think it's really important, guys, to not be FOMOing into projects, right? I mean, you really do need to do your research and have a better understanding of the foundation of that project, right? Don't just read a tweet and say, oh, I'm going to go invest into that project. Really do your due diligence. And that's actually, we just started a new video series. We'll put a link to it, guys, so you can, if you want to subscribe to the channel, where we break down different projects, different crypto projects, and really break down the foundational analysis as well as on-chain metrics, just so you guys have a better understanding and make a better educated decision on if you should be investing into these projects long-term or not. I know, Matt and I think we both have kind of similar investing strategies. We're not, we're not full-time financial, analysts where we're sitting there looking at charts all day long and trying to swing trade, looking at the 15-minute chart and try to make a quick buck. I think we both kind of have more of a long-term approach, and so teach their own, right? But if you are more of a long-term investor and you don't want to be looking at the the markets every single day and sitting there staring at charts, I think it's important to understand the foundation of a lot of these projects and then invest into the projects that kind of align with what you feel these projects will be around. I think, and you already saw it with Luna, right? I mean, Luna may not be around, right? I mean, they
Right.
may have just their reputation has been tarnished, right? And so a lot of investors may not want to get back into the project, even though the project could be sound. It's important to know that some of these projects are just not going to be around much longer, and that's just the nature of the crypto space. So while you have thousands and thousands of coins, look at how things change year over year. A lot of these projects are gone.
Yeah. And I'd say two things to that too, Mark. I'd say that's why, it's definitely important to do your due diligence, right? And really research this. And when you're researching it, it's very easy to kind of get, especially in crypto, to get bought into a coin, right? And feel really strongly about a coin. And just think about it, think about the flip side of that, right? Think about what are the areas of criticism? Like if somebody else really didn't like the coin, what would they say about it? And how does that kind of change maybe your framework for understanding it? And then the other thing too is just, creating basically a portfolio where you don't have all your eggs in one basket. But yeah, those are the two things I would say to that.
Yeah, I mean, being diversified, obviously, right? And I have some friends that are super risk tolerant. I mean, they have 80% of their investments into low or mid cap projects, and I don't know, that would scare the hell out of me to have that. So I've always been kind of like, hey, Bitcoin is 50% of my investment strategy. It always has been, it always will be. Same thing with Ethereum. Like, I try to stay in the top 10, but it doesn't mean that there's not a lot of money to be made in the low cap projects, but timing is almost everything, right? When it comes to getting into these projects. And so wait for Bitcoin to turn around, and then you're going to start to see investors feel more comfortable in some of these low cap projects.
Yep, absolutely.
Cool. Well, man, I think we've covered a lot. I mean, it's an interesting time in the space right now. I know just people were asking me just like the last couple of days that don't even really follow the market. They're just seeing it in mainstream media, and they're like, man, what's going on? Or like they're all hesitant to even get in because they've always been kind of asking questions about it, but they've always been hesitant, and even more so now. But to me, like when I see red, all across the board, that's the time to be investing, right? When it's all green and everyone's all happy and has euphoria, that's the time to probably start selling, or at least DCAing out of the market.
Exactly.
So it's an interesting time with regulation, with what's going on with Terra Luna. All these big institutions that are manipulating the market, or not, who knows? We'll kind of see what happens.
Yeah, for sure. And I completely agree. I kind of want to second that. Like, I think, it's, I guess what Warren Buffett says is when people are fearful, that's the time to be greedy, right? So right now when the market's red, the stock market and the crypto market are the only places where when it goes on sale, people run away.
Yeah.
It's just, but now is definitely the time to be buying.
Cool. Awesome. Well, thanks for so much for joining me. Hopefully you guys that were watching got a lot of value out of this. We'll go ahead and put links to both the CryptoMade and Crypto Mavericks websites. Feel free to check us out, follow us on social media. Hopefully we'll see you guys in an upcoming interview or call or discussion, whatever you want to call it. But thanks again, Matt, for joining me.
Yeah, my pleasure, Mark. Great,
Okay.
great to be on.